Good morning, everyone. How you doing? So it's actually family wedding day. So you're up. Your boy's got a suit on, got a tie. It has been a long time since I put on a tie, and I definitely got to get back to the gym because I'm looking a little pudgy in my suits. But anyways, back to the point of this video. I am starting to wonder, what if the Fed or Powell or the governors, whatever you want to call them, don't lower rates by a quarter on Wednesday. So let's play this out a little bit. So earlier we were talking about on this show, we were talking about, okay, if the Europe eases, they start doing their bond thing, it's going to be a no-brainer for the U.S. But frankly, we've seen a couple of statistics recently, or metrics that really caused me to wonder: should we, right? Should we chase this, right? First and foremost, inflation. That was reported Thursday. Memory serves, it came in a little hot at 2.4, which has really been the missing element this last decade, as we've had really kind of a stagnant growth. But 2.4, a little hotter than normal, certainly should be at least caution. And then the big one, right, I've been talking about since last Sunday was retail sales. And yesterday's show, we talked about, hey, some people are trying to muddy the water, talk about Amazon Prime Day, and basically get ready for a negative number, and let's explain it away. Because again, this is all about the consumer, right? Where it's, two-thirds consumer-based economy. And lo and behold, it came in at 0.04. So now you slap in the whole Prime Day thing, and it could have been even better, right? Because Amazon's Prime Day was in July. This was August numbers. So if the economy in the U.S. is doing better, if we have kind of a path to ending this trade war, and the psychology or the impact on the consumer is now muted, or at least as worse as it's ever going to be, why would we cut rates, right? I think Powell's in a horrible circumstance. I think he would have loved to have seen muted inflation and a negative retail growth. It would have given him cover. But now inflation is higher than expected. Retail sales were significantly higher than expected. So the consumers are still spending. So going into that environment, why would you cut rates? Then you tackle on top of that other things we saw last week. Last week was the worst week on record since like 2000 and since right after the election for mortgage rates, right? Mortgage rates went up 20 basis points inside of 5 days. And that's into an environment where people are expecting the Fed to cut. So again, all signs are pointing to the economy, specifically the consumer, is not as in dire straits as we kind of were left to believe 3 weeks ago when Hong Kong and whatever it was, Argentina and the trade war and all these things were kind of merging together to really potentially dampen the consumer. So I am really starting to believe, first off, to be Powell in this environment where you have higher inflation, strong consumer, and then you have somebody beating you up and calling you an idiot, that would not be fun. So I really don't envy that job. You couldn't pay me to do it, nor would I even be qualified. Let's just take that off the table, right? Not qualified to do it. So it's interesting. Josh, mostly media political hype. Some of this certainly is, but I don't think kind of the stats, unless they're fudging the numbers, which if they are, then we'll see. Uh, but again, I don't know how you could cut rates in this environment. Is I guess my opinion. And if what I see is true, then play that forward as a retail or as a real estate investor, right? So maybe we've seen the lowest rates we're going to see, at least for 19. We're not going to have four cuts in a row because the economy is stronger. Again, specifically the consumer. So pretty interesting stuff. Again, I'm only interested in how this all impacts the retail market, right? Owner occupants are my biggest competitors, right? They dominate the market when they're excited, and when they disappear, I have the pick of the litter, right? The best time to buy stuff as an investor is when the owner occupants disappear. I love that environment. I've done it once in my career, and it was awesome. So I look forward to doing that. That's why I watch this. And the other one is cost of capital. My biggest expense every month is my mortgage payment. So if cost of capital goes down, I could refi or recast debt. Everything I do. These monthly shows, it's all about those two factors. But if we step back, there's more stuff going on. The WeWork IPO, soon to be IPO, is interesting. Let's see. When do you think house prices are going to start falling? Oh, that's a good question. So when do I think house prices are going to start falling? It will depend on locale. I typically focus on um, above the median, and I think those prices are already falling. So I'm not sure where you are in the country, but for example, in San Francisco and Santa Clara, which are markets that I live in and know the most, the high end above the median is already falling, and I expect that to continue. And where I was just going with this WeWork IPO is we're now seeing people that, people who thought they were going to be, oh, you're in Mississippi? So I don't know Mississippi all that well, but I would suspect if I wouldn't be buying or flipping above the median, right? So for example, if Mississippi's median's 125, I wouldn't touch anything above 150. And I don't know the numbers, but that's the example. But again, if the median's 125 in Mississippi, I would still be investing 60, 70K houses because they're likely cash flow. And that's all I've ever done, right? One rental at a time. This channel, my book, is all about cash flow, being a landlord, affordable housing. It's where I grew up. It's what I know. So that's what I think. I think that logic holds whether you're in Mississippi, Florida, or California. I hope that helps. So again, back to WeWork. It was supposed to be it had a $45 billion valuation. It looks like it might go out for sub 20. How crazy is that? How big of a haircut? There will be VCs losing $25 billion, or at least losing billions of dollars. But more importantly, what does that do to the psychology of other quote unquote unicorns or tech IPOs that are on the horizon? It probably means they were overvalued, and thus their IPOs will be more dicey. And this just goes on the back of Uber and Lyft and Slack and all of these things. And where I'm going with this is the Bay Area real estate market has seen its peak, in my opinion. The IPOs, the RSUs, the options that all of these Silicon Valley tech people were looking for aren't going to happen, or aren't going to happen at least the size that they were counting on. So I believe, to an earlier question, real estate prices have peaked in the Bay Area. I believe they will go down in 19. I believe they will go down in 2020 because they are flat out unaffordable. So I think that's going to happen. The other thing I think that's pretty clear in the WeWork IPO is they need money, right? They are burning cash, and it's uglier than we're probably led to believe, right? If they're striving so hard to take a $25 billion write-down on valuation, there's a reason, right? They're in trouble. So again, this is what I'm thinking. I think Powell's in a tough spot. I want it on record that he shouldn't cut on Wednesday if what we saw this week is true. I still think he does. I think they've kind of committed to it at this point. What he'll do is he'll cut and then he'll come in ultra hawkish, like that's it, no more in 19 or whatever. So in the end, it's an interesting week. I think the economy is stronger than everybody thinks. I think the Fed's in a tough spot, but they'll cut. I actually hope they don't. But again, I think they cut just because they've kind of told the market it's coming. And then the trade war seems to be on a path to resolution. But as always, we've seen in the past that could change in a heartbeat. So stay tuned, have fun, and I'm going to go see some family members get married. All right, take care. Thanks.